Hi, Shae Russell here, editor of the Daily Reckoning Australia, and I thought I'd get in touch to talk with you about gold. Surprise, surprise, what a change. Now, look, the reason why I wanted to talk about gold today, and I think for the second time this week, I'm getting a lot of questions about what is going on with the gold price. Now, I just wanted to clarify something, and I've said this personally to some people around the office here, is that I think some of these big falls that we've seen in the gold price since May are unusual. There's sort of no rhyme or reason why it should be happening. When you track volume, it's not making sense. When you track the futures markets, it's not making sense. It's very reminiscent of when the day Donald Trump was elected back in November 2016. Now, I actually was trading the spot price of gold at that point, and I had quite a large position. I'll open up into the night. It ended up with a very sudden reversal in the price. And I ended up not doing as well as I would have hoped that night. But what did happen, I later found out within about 48 hours, is that there were two $1 billion trades that had gone through, and they completely stunted the gold price rally that was happening. Now, it's not market manipulation. They just happened to be two trades that were dumped. And you can find record of them here. I'm not making this up. There is records of both these trades going around at the time. Now, that is sort of what I think is happening this time around. I do think there are some very large gold sales happening. It just feels isn't a technical term, but the sort of trading behavior I'm seeing in the gold price does very much reflect that there are some very large gold sales going through that is suppressing the gold price, just because we're seeing these massive falls in the gold price, and there's not a lot of evidence to support these falls. So what do I think is going to happen from here? Well, now that these price falls have started, I still honestly believe that we are through a 10% retracement in the gold price. The question is whether it's from the gold price high in mid-April or whether it's from the gold price high in mid-May. Now, if it is a 10% retracement through the mid-April price, that high was $1,350 US. That means if it's going to fall 10%, we're looking at bottoming out at around $1,1210 US. However, if it's a 10% retracement from the mid-May high of $1,321, that means we can expect the gold price to fall a lot further to around $1,180 US. So that would be our two 10% retracement levels. How do we know which one to expect? Right now, I'm leaning towards the 1180 to 1190 mark to be the point where gold sort of bottoms out. I'm not inclined to think that the retracement started in the middle of May, and it's just because of, and the reason why is because of this abnormal gold selling behavior I started seeing in mid-May. I believe the mid-May sell-off is what has triggered this 10% retracement. However, I am still very much bullish on gold, and the reason for that is we've seen these sort of 10% retracements occur in all bull markets around the world. However, when they occur in the gold market, it's actually a big indicator that this sort of, once this 10% retracement has shaken out some traders, more investors are going to come into the market. How much longer is this going to play out for? I think we could still estimate that around August, early September is when we're going to see the gold price bottom out. And I am still convinced that there is a good chance gold's going to rally towards the end of the year, and we could be looking at, some crazy gold spikes coming forward. Of course, forecasting these price games too late into the year is a bit of a fool's game, but I still believe that there is a chance that can happen. That's all from me today. I'll be back later next week with more.